Well, according to reports, the Mauritian banking industry is about to face difficulties in its domestic growth because of an increased number of players entering an already highly competitive market. Well, not surprising, given the way that Mauritius is performing on the World Economic Forum's Global Competitiveness Report. Joining us now from Mauritius is Ashraf Esmail, who is in the firing line, if you like. He's the Chief Executive Officer of Bremer Banking Corporation. Before we go into more detail about the banking system, is it a cause for national celebration in Mauritius that you've gone up the scale again and up another 6 positions to 39th in the world on the WEF's competitiveness report, and by far now the most competitive nation in Africa?
Yes, Alex, I think that's a great news, and I think it's something to definitely celebrate for. But I think it's the result of some hard work that the government overall has put in place in terms of the reforms in the business sector, in terms of making sure that this jurisdiction, this place becomes a place where it is easy to do business. And a lot of reforms have been done in terms of new legislation, in terms of the Business Facilitation Act that was put in place, and a number of different items, elements that have been eased up to make sure that this destination is good for doing business with Asia, with Europe, and with Africa.
Well, that's the good news. The bad news for an incumbent like yourself in the Mauritian market is that it surely attracts new competitors. Are you finding that, it's already a competitive market in the banking field in Mauritius, that it's becoming even more intense?
Well, I think it's all about defining what the market is all about and which market we're talking about. I think there's definitely a place for other banks to come in. I think the governor of the central bank is also encouraging that. It's not about the local market necessarily, it's about specific segments that these newcomers are targeting. The recent ones being the 2 private banks which have been licensed, and their mandate is primarily to target the international private banking segment. And I think there's the scope for doing that kind of activity, and we wish them good.
But there's also been quite a lot of work on the levels of non-performing loans rising. It is something that we've seen certainly in South Africa. It wasn't something we would have imagined as also happening in Mauritius. What's behind that?
I think if we go back, it's primarily due to some lag effects that we've seen, following the global financial crisis. And we are located here initially thinking basically that we have not been directly affected after the immediate effects that we've seen in Europe and the America. But the result of a lower slowing demand in these markets have had an effect with a certain lag in Mauritius. And we've seen primarily in the tourism sector and export-oriented sectors that they've definitely seen some hard times. And we've also seen some bubble forming up in the construction sector. That's why you've seen that the central bank came up with some macro-prudential measures to curb down lending to those specific sectors and increased the level of provisioning required. And this is obviously good for the sector because it prepares the industry, the banks to face any kind of casualties in there. We've seen recently one of the construction real estate development company that went into receivership. It's something that happens. We need to be aware of that. But we need to prepare ourselves to rebound. And the measures, I think, are really having an effect. We've seen a deceleration of credit to some sectors like construction. And it's good that this is all mitigated and well managed so that it doesn't affect growth in the long term for the economy.
All about flexibility indeed. One of the big advantages you do have from a banking perspective, though, is all these double taxation agreements. And I'd like to know, Ashraf, the agreements that were signed between Mauritius and Nigeria, Kenya, the DRC as recently as 2012. Have you seen better flow of investments through Mauritius as a consequence into those countries?
I think in the immediate term, we cannot really conclude. I think it takes some couple of years to get the flow really happening. I think it's a good thing that these treaties have now been ratified. And obviously, we've got good relationships with Nigeria, with Kenya, with the DRC, and there has been work already happening since a long time. For example, our own group, to which we belong, British American Investment, has been in Kenya for the past 30, 35 years. We are already there doing business. There's obviously a lot of new flows of investment and trade into Africa from private equity funds, from corporate entities, from India, from Asia doing business in Africa. And having these agreements in place will definitely make it fairer, a better way to do business using Mauritius as a place where you can structure investments. The place has emerged as an international financial sector of repute, and especially when you take into account also the investment protection agreements which Mauritius has with a number of African countries. That makes it a safer way for a lot of European, Asian clients to basically structure investments from here and work with Africa in a more predictable manner.
Interesting insights there from a country that is on the up. As I mentioned earlier, they rose 6 places, did Mauritius, in the World Economic Forum's competitiveness report that was released yesterday, to 39th. Second in Africa is South Africa at 56th place. So quite a lot of daylight now between the two countries. That was Ashraf Ismail, who's Chief Executive Officer of Bremer Banking Corporation of Mauritius.